watching, I see there on this late night live stream, and I just wanted to go live and discuss something that just caught my attention. And yeah, sorry, you might hear my cats in the background there. But I didn't want to wait until tomorrow for this because this was truly a shocking number regarding the U.S. national debt that I just witnessed. And I want to talk about this with all of you and what the potential implications are here, and also just kind of what this scenario as a whole is kind of starting to look like for me. And sorry, I don't have the usual stuff out here because this is kind of a quick impromptu one, but this is the data. I'm going to get right to it here for you that I wanted to bring to your attention. And this is a website that we've looked at in the past. It's the U.S. Treasury debt to the penny website. It's kind of a cool site. They'll update you daily on what the U.S. debt is provided by the Treasury. And I was looking at the data, the most recently released data a couple hours ago, and I just thought that this shouldn't wait until tomorrow. This is wild stuff. So look at the increase, the most recent number here. We went from $33.167 trillion dollars on September 29th to $33.442 trillion. Yeah, trillion, that's with a T. On October 2nd. So over the weekend, we went up with something like $280 billion. I don't know, it's late. I mean, you can do the math. I think if you add up the math and the period of time over which that took place, like 3 days over the weekend, from September 29th to October 2nd, comes out to almost $4 billion an hour. I mean, this is mind-blowing stuff here, folks. And again, I want to talk to you about what this means because, I mean, this is really starting to look ugly, and I think there could be some serious implications. I got something fun for you here, too. So I was doing my live stream earlier, and I had the old national debt clock still queued up here. I guess it's like cached in the tablet's browser. So I thought we'd go ahead and refresh this while it's live because earlier today it was still saying 33.16 trillion. But let's see what happens when I hit refresh here. Wow, look at that. Caught on film. $33.442 trillion dollars with the refresh of a browser window. And if that doesn't sum up 2023 so far and where we're getting to in 2023, I don't really know what does. And all I can say, a couple things here. One, I've got the dollar in a silver round. I got my Cuauhtemoc out here. And I think, this is an appropriate round for the occasion because this Aztec calendar kind of has some apocalyptic implications, I think. And look, I don't want to be a chicken little or, an alarmist or whatever other pejorative term I'll get labeled for trying to sound the alarm on this. Because I know every time I talk about, a crisis is right around the corner, a lot of people in the comments say, oh, we've been hearing that for years. But look, I mean, we haven't seen numbers like this ever. I mean, this is new, right? Even during the pandemic, when there was a tremendous amount of borrowing and running up of the national debt, it had a different feel to it. I mean, that was at a time when, we were in the midst of a crisis, whatever you want to call it, manufactured crisis, real crisis, whatever. This is ostensibly right now in the midst of the strongest economy ever that we've been hearing. There's no crisis going on right now, right? According to the mainstream media, they're just going to have a soft landing and inflation's going to get under control and everything's going to be fine. But when you look at this number, I mean, they're running up the debt like $4 billion an hour. It's incredible. Earlier today, this said 33.16 trillion, and today 33.44 trillion. And if you wanted to write a book about an economic collapse, what would it have in it? It would have surging interest rates, surging debt, rising inflation, political turmoil. We just had the Speaker of the House, McCarthy, voted out by the other Republicans, first time in U.S. history. We've got a government shutdown, which was averted for 45 days a couple days ago. So clock's ticking on that. Looks like now that this guy's out, I mean, this was largely due to the debt ceiling, or not the debt ceiling, but the government shutdown compromise. So, in 40 days, they're not going to have another compromise. This is not going to end well, folks. Literally, if you want, someone's saying the SD website is down. Yeah, by the way, sdbullion.com, today's video sponsor, check them out with the link in the description. If you want to take advantage of this pullback to get your hands on some wealth outside of the financial system, you know, I not financial advice, but might want to consider doing that. When you see the debt rising at this level, I mean, this literally is exactly how you would set the stage for a massive systemic economic collapse. And I'm not saying that that's going to happen necessarily, right? It's not guaranteed. Any given day, the probability of that occurring is very, very low. But with all the factors that are in effect right now, for example, I mean, we looked at this earlier today on the live stream, but we can look at it again because it's actually gone up since I last looked at it. The 10-year yield is now at 4.80%. I forget what it was earlier today, but 4.7 something. Ended the day up 2.5%. That is an enormous move in what is ostensibly the most liquid debt market in the world. When I say that, when I say the U.S. debt market is the most liquid in the world, it's supposed to be the biggest volume of trading, the safest safe haven asset you can have. Look, safe haven assets shouldn't fluctuate by 2.5% per day. The world's most liquid debt market shouldn't have volatility like this because this isn't like a one-day event. Okay, this rate has been moving up for some time now. Look at the 6-month chart of the 10-year yield. Yeah, Jeff Nelson says gold $1,700 and then the hopeful symbol. Yeah, maybe gold might go to $1,700. Silver might go back down to 15. I've been calling for that for a couple months now. Not saying it would happen, but just saying it's a possibility. When you look at the chart of silver, I put a 1 if you want me to pull that chart up and put it in the chat if you want to see that chart. We can get an updated view. I mean, I don't have to. This is okay. I see a couple ones coming in. Give me 1 second. I'll pull that up. But when you look at the long-term chart of silver, and there are some of these patterns forming on the long-term chart of gold as well, but the silver one is really the one I've been paying attention to. And I mean, we've looked at this several times over the past month or two. You can see I've got on TradingView here the chart drawn, the long-term chart of silver. There's a long downward trend line from the 2011 highs, and then you got this cup and handle. Someone put a 2 in the chat. Pierre's mobile card detail service. I see you on these videos frequently, Pierre, so thanks for tuning in. I don't know if 2 means you don't want to see the chart, but we'll get away from this in just a moment. Oh, SD Bullion. Okay, they're performing a website update. Don't worry, folks. This was an unplanned live stream, so they probably didn't expect me to send anybody their way. Their site apparently will be up shortly, according to Corey in the chat here. So this is the downward channel that the price of silver has been trading within. And when it was up here, touching this upward boundary there, I did mention that I thought we could trace down to the lower side of this channel, and now it's looking like that might happen. We're certainly well on the way down to maybe like the $15 or $16 level. And look, I'm not a technical analyst. It's just like some of these patterns on these charts I think are valid and worth looking at. Some people don't. I tend to view the fundamentals as being the truly important things, but when the fundamentals are confirmed by the technicals, it's something we need to pay attention to. Should silver touch the bottom of this trend line, I think it will be, a temporary thing, mind you. Now, a lot of times people will react to these videos where I say, well, silver's going to go down or could go down, but ultimately I think it's going to go up. Like I'm talking out of two sides of my mouth, and I'm just saying, well, my prediction is that silver could go up or down, and obviously that would be, kind of padding your bets there a little bit. But no, I'm not saying that it could go up or it could go down. I'm just saying that, ultimately I do view the price of silver when you see the debt being increased by $280 billion over a weekend. I view the long-term prospects for gold and silver and the precious metals as highly favorable because debt of that magnitude will ultimately have to be monetized. And that's why, this stuff is just paper. Just remember that. I saw somebody posted, I think it was in the comments of one of the videos earlier, they said, paper money burns and real money shouldn't burn. And I agree, it should melt. And that's what, the founders thought too. That's why they enshrined in the Constitution that only gold and silver would be legal tender. And then, they had the Coinage Act and they defined that. But the point is that I'm sorry, bear with me a moment while I gather my thoughts here, folks. There may be a decline in the price of silver. It's possible. There could be a sell-off. Some people will say that means it's not a store of value. I don't think so. I think that just means that in a crisis, folks will sell anything for liquidity, at least for a time. But the thing is that is when everybody still has confidence in the system. They're going to be looking for safe haven assets at some point once they come to the realization that we're in the midst of a different kind of crisis. It's not going to be a real estate crisis. It's not going to be a financial sector crisis, although I think both of those sectors will be affected. But what it's going to really be is a debt crisis and a currency crisis. And we've got a lot of factors coinciding here, folks. We've got the political unrest. We've got deep divisions in our country. We have a bit of lawlessness in some places. You see places now where theft has been sort of decriminalized, and you see places where there's social unrest, and you've got high inflation, and you've got consumers who are tapped out. They're paying for their bills with their credit card, and their savings have been depleted, and the savings rate is at the lowest it's been in some time. And all these other factors, spiking interest rates, geopolitical tension. We're on the verge of war. There's a lot of things that are kind of coinciding at the moment. And again, I'm not trying to be alarmist. I know that in the past there have been calls for, a crisis around the corner. But one thing I will say to that is that just because the factors that are leading to this crisis have been building for years now, and some people were sounding the alarm early, that doesn't mean that those factors are non-existent, right? It just means that the crisis hasn't occurred yet, and the system has proven to be a bit more resilient, perhaps, than some people expected. But when it comes to preparing for a currency devaluation, I really do think it's better to be early rather than late. Pause real quick here. We've got 249 people on the live stream. That's pretty awesome for an impromptu late night live stream like this. We got 64 likes. If we could get to 100, that would be pretty awesome. So, I count on all of you to support the channel in that way. Smash that like button. And you're also helping other people out because you're helping to spread this information, because you're probably not going to see too many people on the mainstream media pointing out that this almost $300 billion being borrowed over a weekend is a real problem. I don't know what they did. Did they pay off someone in Ukraine? Did they, go out to a fancy dinner and drop $280 billion? How do you spend $280 billion in a weekend? I don't even know. It's shocking. It's really shocking. It's like, how do you spend that much money in that short of a period of time, even when you are, a government? It's wild stuff. So anyway, this is what a collapse would look like. This is what a collapse would look like. You've got them preparing CBDC. You have got, who was it? One of the Fed presidents. I posted a meme on the community page earlier of this guy. One of the Fed presidents just came out and said long-term interest rates are not affecting the U.S. economy in a significant way yet. It's incredible. Look at the U.S. debt clock online. The USA tax revenues are going backwards as the U.S. national debt is blowing out. Yeah, that's from Rolf Steiner in the chat there. It's true. Tax revenues are declining because we have a deep recession in this country. Business activity is declining. I think the small business bankruptcies just hit a record high as interest rates begin to put pressure on businesses. Businesses rely on credit markets. It's not just the banks that are suffering from these higher interest rates, right? It's businesses across the board, and small businesses don't have access to certain lines of credit that larger corporations might have, and so small businesses are under attack here in this economy. And this is just kind of what you would anticipate seeing before a major crisis. Like if you had to write a novel, if you had to create a writing prompt, I can't even come up with, maybe aliens landing or something is something that, hasn't happened yet, right? that could be more extreme. But we've got a brewing war in Eastern Europe. We've got the potential for a significant conflict in the South China Sea. We've got the Korean Peninsula. You have got rebels in Africa and Niger and Gabon, places that are sort of defecting to the global south. You have got OPEC members joining the BRICS organization. The fact that you have the BRICS organization, period, and the whole de-dollarization strategy that we're witnessing by the global south, I mean, that in and of itself is a very ominous sign for the U.S. economy. And of course, the thing is that the mainstream, the powers that be, they just keep telling us everything's fine. Don't worry, just look over here. Meanwhile, they're probably preparing the response to this crisis, which is going to, yeah, Brian Barbie mentions that maybe tomorrow with the emergency alert. Tomorrow they've got what, a national alert. I think on the East Coast it's going to be like 2 p.m., 2:20 p.m. They're going to be sending out an emergency alert to everybody's cell phone. What are they preparing for? What do you think that's for? Put it in the chat. Whatever you think the crisis is that they're preparing for with that national alert. I mean, I know there's some conspiracy theories out there, and we got to be careful about putting on our tinfoil hats too hard. But the thing is that a lot of these conspiracies that get promulgated on the internet, I think, are just disinformation. Like some people come up with such like, oh, the Earth is flat. That's if you believe in the debt being a problem, you must believe the Earth is flat. I mean, that's an extreme example, but that's kind of the idea. Is like you throw out these crazy theories and then you associate them with legitimate things, like people who say, oh, running up endless amounts of debt that can only be financed via the money printer is the same thing as saying, UFOs are controlling our mind. So I know there's a lot of conspiracy theories about the emergency alert tomorrow, but I do think that it is a sign that they're getting ready for something. And yeah, that's all I really wanted to come out and say today. I just didn't want to leave that until tomorrow. I'll probably do a live stream tomorrow. We'll see what else is happening. We'll get an update on the markets. Let's see. Joshua Gaming Roaster, thank you, sir. Did you know that some brokers keep their treasuries on their books for less than, can I scroll up? Yeah. Less than a day before being bought by the Fed. I did not know that, but that does not surprise me. And ultimately, I mean, the Fed is going to be the one who has to buy all of these treasuries. Oh, we had someone ask a question about a question. Buy a 1 ounce gold buffalo or a new Glock 19 Gen 5. Oh, you're going to get my video. If I say those words, you're going to get me censored. I don't know. I mean, security is a very important aspect of preparedness, I think. So, wherever you happen to live, some places you can have a pointed stick, other places you can have something a little bit more advanced than that. Probably if you live in the US, something a little more advanced, I would say, yeah, you want to definitely have that. Also, I would say, if you already have one of those security devices, maybe instead of buying another one, you might want to invest in some training. It would be probably wise. A lot of preppers, I think, just focus on stacking up a bunch of security devices, and you'd probably be better off with one or two that you know how to use really well. That's what I'll say on that. But Janet Yellenstein has to. Janet Yellenstein, the Greg Manarino thing. We've seen a lot of Greg Manarino references in the chat recently. That's great. All right, so yeah, that's pretty much it, everybody. The debt is exploding, so get ready because there's a lot of other factors coinciding with this. We got someone in the chat. Earth is flat. Yeah, that's funny. Um, is a CBDC confirmed in the USA? Someone said. Well, according to Lynette Zhang, we all have Fed Now accounts created in our name. So, I haven't done a tremendous amount of research into the CBDC. I know that there's an executive order that was signed by the current illustrious inhabitant of the White House to investigate the use of a digital currency. And I know that they're devaluing our currency, and I know that they're trying to institute tight economic controls at some point, very likely as a response to that, and they'll probably want to use it to institute micro taxation and absolute minute control of the economy. Controlling the interest rates and the price of money isn't enough for them. So, yeah, I think there probably is a CBDC. I don't know if it's been confirmed. Check out Fed Now and the information about that. I mean, you can certainly look up that executive order too. There's a page, I think, on the White House page about it, about how we need to look into digital currencies. And Yeah, I mean, a cashless society is right around the corner, folks. One thing that people don't really pay attention to is like the composition of U.S. nickels. I'm just going to take a little tangent here. But nickel coins are one of the few bullion coins we really have left. They're composed of 25% nickel, 75% copper. They still mint them in that composition, and the metal content of a nickel is actually worth more than 5. So there are some bills before Congress right now to replace them with something. I don't know what they'll replace them with, some other composition. I think there's a few things up. They got like a composite nickel or a steel nickel or a zinc nickel. Whatever, but that's a sign that they're probably ultimately just going to talk about getting rid of cash entirely. I mean, we saw some talk about getting rid of change during the pandemic. They said that there was like this change shortage, and there was a lot of talk about getting rid of that stuff. Ultimately, I do think they'll want to get rid of cash. If you want to protect your right to have cash, cash is important. I mean, it would be better if this was backed up by gold or silver, but still having a paper note, even if it's just a colorful coupon that's backed up by the Federal Reserve, it's still better to have than a digital currency. Yeah, most transactions now are digital, but at least you have the option of paying with cash. If you want to defend your right to have cash, just pay with cash. Use more cash if you want to encourage others to do the same, because cash is an important part of the economy. It allows you to have some privacy with your transactions. It allows you to at least hold some kind of a representation of value outside of the financial system. Although, even if you take all your money out of the bank and you get it in cash and you stuff it under your mattress or bury it in a hole or something, it's still going to get its purchasing power stolen via inflation. So it's not too much silver reflection. Yes, sorry, this is again not my normal setup. I'll put Quatamok over here so that he's not shining in your face. But yeah, I mean, I think a CBDC is probably coming. They'll try to implement controls. I mean, if you just look at what's going on, how they've responded to previous crises, they think that it's like a lack of central planning and central control that causes these crises. Reality is, of course, that the crises are caused by all of the manipulations of the economy by the Federal Reserve and all of the ridiculous spending. But yeah, they'll probably try to roll something out. I mean, I don't know. We'll know it when we see it. That's all I'll say. And there does seem to be ample evidence that there's some stuff in the works. But again, you won't know it until it's too late, right? It's all about managing expectations and maintaining confidence in the system. Remember, it's a confidence game, a con game. That's where you get that term from. And it's because things like Ponzi schemes, which, Social Security is a good example of one, or Medicare, things where we have unfunded liabilities to the tune of $195 trillion, like completely unpayable programs that rely on new investors and new payees constantly coming in. That's the definition of a Ponzi scheme, and then that's what we've got going on with a lot of these entitlements and other government programs. It's a confidence game, a con game. They've got to maintain confidence, so you'll never actually hear the reality of the economic issues that we're facing from the mainstream. They're always going to put a really good face on it, but again, just go to that site. I mean, it is kind of hidden in plain sight. That's the thing. They can say, well, we told you. Look, we put it on the website that there's $280 billion borrowed over the weekend. Um, they'll put it out there in plain sight because they know most people aren't paying attention. They know most people have their heads buried in the sand. Most people are watching CNBC and watching Jim Cramer, and they're thinking, "Oh, what stock should I buy next?" And there's a place and time for paper assets and stocks and businesses and companies, but in a season like this, I think there's also a pretty strong case to be made for physical hard assets, and the fact that they're going on sale right now, they're selling off along with a lot of other assets. I think is just an opportunity for stackers and an opportunity to acquire more. Maybe you differ in your opinion. Leave me a comment down below, whatever you think. Maybe you think it's a good idea to wait until a big drop occurs. And, there's something to be said for that. It's a gamble, though, I think. Um, I think it's a gamble because if you're sitting just in paper and you're saying, well, when the price of silver and gold craters, I'll buy into it. Well, it might not happen, right? It might not fall far enough for you to hit your buy, and then it's going to start soaring up at a high pace once the inflation really kicks in. And again, this is my forecast, my opinion. What do I know? I'm just a guy on YouTube. It's just that historically that's kind of how these things work out, and I think that once it's too late to get in at these prices, it will be like really too late. Like sayonara, you can see those cheap prices in the distance, and once the crisis really kicks in, this stuff's going to be hard to get. Again, in March, we saw when the banks were failing, the physical metal dried up, and it wasn't because us stackers, like people like me who buy, a couple ounces at a time. I buy maybe the most like a kilo bar of silver at a time. It's not because people like me, small time stackers, are coming into the market. And maybe it was because some of the folks who watch this channel, I know that there's people who watch this channel that stack, a hell of a lot more metal than I ever have, and who have some deeper pockets. But it was because those folks with deep pockets, quote unquote, maybe you might call them the smart money folks who have acquired some significant wealth. Who have come in and they've bought, $500,000 of silver in a shot or $1 million of gold in a shot. And when those folks start coming in, someone said I'm not small time. Thank you, Mr. Jones. I appreciate that. I mean, I'm not saying I'm small time, but in terms of the demand I personally bring to the equation is fairly minimal compared to um, some big money folks. And when they start coming into the game and buying up physical metal, well, there's just not that much of this stuff to go around, folks. You got to remember that. I mean, the annual production is what, 800 million ounces or something like that, and most of that gets consumed by industry. So, again, and that's for the whole world. That's not just for the United States. And when this crisis plays out, it's not going to be something that is just occurring in the U.S. Um, Martin Lee says, "What does the average stacker hold?" I'm not sure. I've seen some people try to break this down. It comes down to a lot of speculation, I think, because you've got to infer a lot of the data. It's not like there's any solid data on there about how many people hold X amount. It's not reported. It's not a transparent market. But I do remember seeing a poll where it was something along the lines of, I think I want to say like 16 or 15% of the people said that they held any gold or silver in any significant amount. And answers to that poll, I think, also included jewelry and stuff. So folks who are stacking like straight bullion, we are a fairly small percentage of the population. And I would say that, let's see, someone says average stacker 50 ounces of gold, 2,000 ounces of silver. Yeah, I would say that's probably above average. If you're talking about just like adding all the stackers up and then dividing it by the number of stackers, that's probably way higher than what the average stacker actually holds. Because I mean that's what gold alone there, $100,000 worth of gold. I don't think everybody has that. No, 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 that's way above average. Yeah, folks in the chat agreeing. Yeah, I think that's way above average. I don't know what the average is though, but I do know that I don't really worry too much about that. And what I focus on is just kind of slowly accumulating and putting some of my savings into hard assets. I view it as like my combination of long-term savings account plus insurance policy. It's like a credit default swap on the currency. I think Sean Fu described it that way a couple months ago when I was talking to him on the channel. He said that the metals are a credit default swap on the currency, and I think that's a pretty solid analogy for the role that they play. And you can't be too confident in a currency that's being abused like the dollar. I mean, we are abusing our privilege as the holder of the world reserve currency. There's no way that without having the world reserve currency status, we could ever go into this much debt. It's all about exporting debt and inflation around the world, or it has been for the past 52 years. I'm sorry, but my cat's losing their minds in the background here, but they get kind of active at night. But that game is kind of coming to an end. Now the major foreign holders are dumping the debt. So yeah, someone's got to buy all this debt. Who do you think it's going to be? I mean, if it's going to be just investors buying up $280 billion worth of debt over a weekend, interest rates are going to have to move a lot higher than they have, although they've already moved quite a bit. And so, if I had to offer up a candidate for who will end up holding all that debt, it's going to be the Federal Reserve. They're going to print the money and then they'll buy it from the Treasury. And that's how they will keep the system from completely falling apart. But I do think that the pain will have to get fairly significant before we see any intervention on the part of the central bankers. Because, Leo Gantz, I had him on the channel recently, and he made an interesting point. He said that right now the Fed is like front and center. They got a big target on them because the population views them as responsible for all of the inflation that we're experiencing. And so, in order for them to return to a policy of easing, they are going to have some very significant political cover. Now, that's not what Lior said. He just said that the public is holding them accountable. He thinks they actually won't return to QE. I guess he thinks that there'll just be a collapse and they won't respond, or maybe they'll respond with something else. But I think that they'll do QE. I mean, they might not call it QE. They'll probably do something like the Bank Term Funding Program, although QE by another name. But it'll end up with them taking a bunch of U.S. debt onto their balance sheet, one way or the other. I mean, there's pretty much one tool that central bankers really have. They can twiddle around with interest rates and stuff, but at the end of the day, direct market intervention in the form of purchasing securities to get the interest rate down to wherever they want to put the target is probably what they'll resort to. That's what I'm thinking anyway, and that's going to be very inflationary in the long term. So that's why I'm getting into hard assets, because I think that commodities will do very well. I think they're one of the few things that will do well. Other things, I think businesses that provide essential stuff, not luxury goods, things like that, but things that people actually really need, like energy companies and stuff like that, they could do well. But listen, I don't know how bad this collapse is going to get. If you get a economic collapse combined with, say, an escalation in one of these conflicts, this could be a real problem. As someone in the comments I had a live stream the other day that was worse than 2008. That was the title of the video, that this one's going to be worse than 2008. And I went over several charts and showed you why right now the situation is more precarious than it was back then. But there was a comment on there that said, the difference between this and the Great Depression, they said it's going to be worse than 1929, is that back then people were kind of self-sufficient, and back then, what you might end up getting is like a hungry guy knocking on your door asking for a sandwich. We had a much more civil society back then. People were much more self-sufficient. A lot more people knew how to do things like grow a garden, can food, fend for themselves in some way, shape, or form. But today, you get this crazy society, this very violent in a lot of ways society, and the civility is kind of gone from the society, or it's fraying. And what you're going to end up getting is a bunch of guys going around kicking in your door, like roving bands of looters. And I don't know if things are going to go that far, but I do know that if you have a massive economic crisis and people's standard of living drops precipitously, and it's hard for people to get food, you do get a big increase in crime and violence. I mean, look at what happened in Venezuela. Now, I've got some family that lived through that one, and yeah, it was really bad. I mean, there's a lot of violent crime, a lot of theft, a lot of kidnappings, all sorts of stuff. So, prepare yourself accordingly. It's not just about getting gold and silver. I think if you just have gold and silver, you're going to potentially have it taken from you if you don't know how to protect yourself. And, you can build communities, you can get training, you can get security devices, you can, there's a lot of things you can do. Focus on your physical fitness, think about security, but yeah, you've got to do that too, because if this crisis is really ugly, there's going to be a lot more considerations than just, how many ounces in your stack, and you want to have food and water and all these other essentials as well. But anyway, that's it. This is went a lot longer than I was anticipating. I just wanted to go over those debt numbers and how shocking that was. We'll be back tomorrow and we'll do an update on markets. I'm sure tomorrow will be an interesting day. Maybe we'll get a little relief rally, or maybe debt will continue to sell off. I have no idea. I mean, things are getting very volatile though, so any given day could be a big problem for these markets. Leave me a comment down below. If you haven't smashed the like button yet, please do that. Leave me a comment down below. Let me know what you think. Stay safe and happy stacking, everybody. Someone said this is a great crowd in here. It is. This is a great crowd. Great bunch of stackers. So I just want to say a huge thank you to all of you for tuning in. And if you haven't subscribed to the channel yet, if you're new, smash that like button and hit subscribe. And click the bell notification so you get notifications for these live streams. All right, that's it. Stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver Stacker